how to properly get a home loan and get properly and correctly pre-approved to buy a house. Today we're going to talk about the 12 steps of home buying and the complete home loan process explained. Everybody, welcome back. Aaron Dehart here. Hey, if you haven't already, please give us a like and a subscribe. It really helps us keep these videos coming out and getting good information out to you. So today we're going to talk about the 12 steps to getting a home loan and getting properly and thoroughly pre-approved. I promise you guys, if you do it this way, it will eliminate a ton of stress. So I often get asked the question, it's like the chicken and the egg. What do you do first? Aaron, should I get a real estate agent first? Or should I speak with a lender first? Well, if you're like 99% of us out there and you know that you need to finance and get a home loan to buy a house, you need to start your journey with a lender and a good reputable lender. You're looking up Google reviews in your area, things of that nature, someone that has a lot of experience. I'm going to tell you right now, you do not want a part-time lender. You want somebody that does this as their full-time career. They study the markets every day and they're into it. They can explain things to you in simple terms, be able to show you things, not just tell you, but show you how things actually work. So let's talk about that. So you want to get your budget in place first, and the only way to do that is by properly filling out a loan application and submitting your documentation to a lender. Too many times, guys, I see it every single month. People go out and they start looking at houses first. They fall in love with a house and it's 700, 800,000, whatever that number is. And they meet with the realtor there. That's typically the listing agent. She represents the sellers, or he or she represents the sellers. They don't necessarily represent you as the buyer. And they refer you over to a lender. So any good lender is going to collect all of your documents up front, plain and simple. If you are a W-2 employee, your last 2 years W-2s, your last 30 days of pay stubs, your last 2 years tax returns, your most recent 2 months of any account statements that you're going to be using for down payments or reserves, copy of your driver's license and or passport, and you're going to get your credit pulled. Not Credit Karma, not, hey, I looked up and this is my credit score. No. It does not hurt your score that much, guys, to get your credit score pulled. Now, one of the things that you should be doing every single time, once you know you want to apply to get properly and thoroughly pre-approved, you want to opt out. So you want to go to what's called opt-out pre-screen. I put a link below here in the description of this video. You want to do that about 3 to 5 days before applying. Here's why. Right now, there is not a law passed on it. At the time of this video, they are working on it, but there's something called trigger leads. And in our industry, they're looked at the same upon as attorneys that are ambulance chasers, okay? What they're doing is the credit bureaus are businesses, and they're selling your information to other lenders out there that are paying money for someone that just applied for a mortgage. You can get 20, 30, 40, heck, I've heard horror stories of people getting 70 to 80 phone calls a day. If you go and opt out and pre-screen and do that prior, that will protect you, okay? So again, you want to be making sure that you're looking at Google reviews, meeting with a reputable lender, and that lender is going to schedule some time with you. So the way I always run my practice, guys, I run it just like I am a doctor or an attorney or a dentist. I schedule times. I have time blocks throughout the day where we're going to schedule an appointment with you to review your pre-approval, go over your budget, go over your goals, make sure you understand every step of the process. That meeting, depending on your experience and how many questions you have, is going to be anywhere from 30 minutes to as long as an hour, because we want to make sure that you understand every single aspect of what you're getting into and that you understand your budget. We're going to answer all your questions, make sure that you do understand. So when you do go shopping for a house, you've got that part out of the way and it's released a lot of stress. I promise you, if you do it this way, you're going to save yourself a ton of headaches. Jumping around from lender to lender and someone promises an eighth of a point less or something that doesn't exist, you're setting yourself up for heartache. Too many times, literally multiple times a month, we have to come in and rescue loans at the last minute. It's frustrating for everybody involved. Everybody's already stressed out. And we've literally got like 10 days to do something that typically takes 30 days. So just keep that in mind and make sure you're writing out all the questions and all the answers that you want to go over with your lender. All right, so now that we got your loan application and your documentation submitted into the lender, we've scheduled your consultation. Now we're having your consultation. I actually use a PowerPoint, and I prefer to have these on Zoom if possible. If not, we'll record that PowerPoint presentation for you and send it over to you via video, where I have a PowerPoint that literally takes you A through Z of everything to expect during the transaction. What happens once you get into contract? What do we do? What happens once the appraisal is ordered? What happens when the appraisal gets back? What happens in initial underwriting, et cetera, et cetera. So that way, you've got a PowerPoint presentation to go back and refer to when we're going through every step of the process. Now, after you've been thoroughly pre-approved and you've had your consultation, now we get to do the fun part. Unfortunately, I'm not the fun guy that always gets to do stuff. I'm the guy that's going to be bugging you for stuff, my team and I, for documentation that we need, or et cetera, et cetera. So now you get to do the fun part, and that's going house hunting, going and looking at homes. At this point, you've also found yourself a very good professional real estate agent, again, who does this full time. I can't tell you how many other times I've heard of horror stories that they're working with a realtor that literally has done one deal in the last 2 years. They don't know the market enough. They don't have enough reps. And a lot of times they make the process more difficult than it has to be, and they get overly involved in the process. So something to keep in mind. So find yourself a good real estate agent and go looking at homes within your budget and within your structure on what we went over in your consultation. Now, it happens a lot. It's not uncommon that you find multiple properties that you like and you want to put an offer in. That's okay. You can put multiple offers on different properties all at once. Once you submit that offer, the sellers and the agent that represents them as their listing agent are going to review that offer. And it's not uncommon that you go back and forth a couple of times, guys, with negotiations. That's completely normal. Don't let it stress you out. Don't let it, get your feathers all ruffled. It's all part of the process. Once they say yes and they accept your purchase contract, they're now taking that house off the market to sell to you. This is when you're going to do what's called your earnest money deposit. And your earnest money deposit is a sign of good faith. That means, hey, we're taking this home off the market to sell to you, Mr. and Mrs. Buyer, and it keeps everybody honest. It keeps someone from getting 2-3 weeks into the process and all of a sudden, nope, I don't want to buy the house anymore. I changed my mind. Well, they're going to keep your earnest money deposit, okay? So that earnest money is a sign of good faith because they're taking that house off the market and selling it to you. So it keeps everybody honest. Now, here's some good tips on to help get your offer accepted. Up your earnest money. A lot of times I tell people if you have those funds available, and let's say it's a 3% required down payment, put all of that 3% in your earnest money. It's going to help you be a lot more desirable and show the show the sellers of that property that you're serious and you have a better chance of getting your offer accepted. Now, once we get into contract, my team and I are going to review that contract. We'll either have another quick 10 or 15 minute meeting to review that contract with you, or we're going to make you a quick video, just making sure you understand everything on that contract, who's paying for what between buyers and sellers, et cetera, to make sure you understand what the actual purchase price is. Then we're also going to update your presentation to where we show what your entire rate board is. If you watch another video of mine, you'll see that everybody has more than one rate available to them, what the best option is for you and how we need to structure it, and then also your estimated cash to close for that particular scenario that we're reviewing. Once we do that, you're going to get into loan processing. So our loan processor, or AKA our transaction coordinator, is going to reach out to you and introduce themselves. And their job is to work closely with you as the file is getting ready to get submitted to underwriting and to help get you a nice clean loan approval. Now, we're so thorough up front that many times, and I'm talking at least 80, sometimes 90%, we will come out of underwriting with nothing needed from you at all. It's all third-party stuff that we're waiting on, and that's what we shoot for. So if it seems like we're asking for a lot of stuff, or once you get into contract, the processor's asking you for more stuff, keep in mind we have to keep your file fresh. I always explain to people, it's like we're on trial, and all the documentation we have to get from you is our evidence, and we're building a case to convince the judge, the underwriter, that you're innocent. And that takes us into our next step. So now we're going to get our initial loan approval. And that means the underwriter, the judge, has reviewed your file. They're looking at your cash, your credit, your income, your job stability, and anything else in particular that might pop up, and also the property itself. From there, they're going to issue what's called an initial loan approval, where they're like, you know what, everything looks good. I'm giving them a not guilty verdict. However, I still need A, B, and C. And again, a lot of times that A, B, and C can have nothing to do with you. We can get our initial loan approval and we're still waiting to get that appraisal back, or we're waiting for some certain inspections back. Next, you're getting your initial inspections and appraisals out. Now, these are two things that are typically going to be upfront cost for you, okay? Depending on the size of the property and how far the appraiser has to travel or not, expect anywhere from between $600 to sometimes as much as $1,500 for an appraisal. Now, the reason it's a cost up front is the appraisers do not work for us. They're an independent third party, and they're performing their job duties up front. We can't close the home loan and close on your house without an appraisal. However, they're doing their work up front. So many times they prefer to be paid up front. Same thing with the home inspectors, or if your loan requires a pest inspection, anything of that nature. Those are independent third parties. They do not work for us, and they do not work for your real estate agent. And they are designed to keep checks and balances, to keep everything in the transaction honest. That's why they have no association with us. Once from there, we're now going to move into step number 8, which is we're getting your title work done. We're getting what's called a preliminary report, or a prelim for short, from the escrow and title company. And that is a legal description of the property, and it's also going to have a chain of title on that. So what that means is they're making sure that everybody that has owned this house before, there's no hidden things on it, or there's not any types of assessments or anything like that have been placed on the property that are going to be required to be paid before we close. So perfect example, if the owner of the house that they're selling it is behind on their property taxes, there could be a tax lien on that house. That's something that needs to be found out before we get to the end, because it needs to be determined who's going to be responsible for paying those property taxes with that. So once we get the title work back and all that stuff, the underwriter's going to sign off those conditions. At the same time, preferably right when you get into escrow on this property, you want to start hunting for your homeowner's insurance. We can't close your house until you actually have insurance in place on the house. So it's one of the first things we like you to do once we do get into escrow and you're getting that offer accepted on that property. Get your homeowner's insurance in place. Many times, if you just let us know who your homeowner's insurance agent is and their number, my team will take care of the rest and get them all the necessary information to take care of that. But remember, we can't close on your house until your homeowner's insurance is in place. Please do not wait till the end. And then finally, once we've got all those third parties back, we're going to go and get what's called our final loan underwriting. And that means earlier when the judge gave the verdict not guilty, but we're still waiting on A, B, and C. We've now got A, B, and C back. It goes back before the underwriter. They're going to review all of those documents and give you what's called your final loan approval, or AKA also known as your clear to close. Now, I actually skipped a step that goes back. So when we get your initial loan approval, we actually send out what's called your initial closing disclosure as well, or your initial CD. What the initial closing disclosure is, is a document that, due to federal laws and regulation, it's going to give our best guess estimate of what your total cash to close is. It's going to show your interest rate, and it wants to make sure that it's matching up with what we told you at the beginning, what your interest rate was locked at, and all of those things. Now, typically, your initial closing disclosure is going to be padded. And the reason why, we're not balanced yet with the title and escrow company. Again, we still might be waiting on the appraisal to come in. So there's still some fees on there that might not have fallen off yet, but we have to keep them on there, because if we remove them, and if one little thing pops up that wasn't on there, even like a $7 fee, it can delay your closing, and we can also get fined. So how they get away with that is they purposely pad it. So that initial CD is very important. When you get it, you want to acknowledge it and sign it right away, because that starts the 3-day clock on when you can actually sign and close and fund on your loan. So we get that out of the way early at your initial closing disclosure, at your initial underwrite as well, to keep us moving along. So once we have our final loan approval, we're now going to get your final closing disclosure or final CD out. And what that is, our loan is now going to move to our funding department and closing department, and our funder and closer is going to communicate back and forth with the title and escrow company and make sure they're not missing anything. Make sure that if there were any upfront fees, those have already been paid and they're getting removed, like for example, the appraisal and any types of inspections. And finally, they're going to balance back and forth and say, yep, here's our final numbers. We then issue you your final closing disclosure and say, hey, this is how much money you need to bring to closing. Here's your overall payment again with that. And finally, once your loan documents go out, this takes typically about 24 to 48 hours after we get your final loan approval. And that's because it has to go to a different department and there's checks and balances. So our closing department and our doc department, they need to communicate and go back and forth with the title company and make sure that everything's good. Once they're there, the title company is going to call you and schedule an appointment for you to come in and sign your final loan documents. This is typically going to be about anywhere from 30 to 45 minutes, and it's important to stay with your scheduled time because they're typically going to have several of those a day. So it's almost just like going to the doctor. So make sure you're there on time and ready to go, and always bring a copy of your driver's license or passport or some type of federal ID. Now, once you sign those documents, typically if you sign early enough in the morning before like noon or 1 o'clock, that loan is going to get funded the exact same day. If you're signing later in the day, typically 3 o'clock, 4 o'clock, 5 o'clock, it's going to be the following day that they fund and close on your home loan. So it's important to keep those things in mind. Now, once the loan is funded, typically within about an hour or two, they send all that information over to the county courthouse, and they're going to do what's called recording the note. So now they're recording it with the courthouse that you are now the new owner of record of that property. So some common questions I always get once you close on your house. When's your first payment due? It's typically going to be at least 30 days after you close. So I'll give you an example. If you close on the end of the month, like for example, July 31st, you're going to have all of August off from making a payment. Your first payment's going to be due September 1st. If you are closing like July 10th, you're going to have the rest of July off, all of August, and your first payment's not going to be due until September 1st. So things to keep in mind, again, just to recap real quick, you always want to get your loan application and provide your documentation to the lender first. Schedule your consultation once they've reviewed all that documentation. Once you're properly pre-approved and you know what your exact numbers are and a comfort level, go shopping for a house, have fun. Once you make an offer and that gets accepted, you're going to have your earnest money. Once we get the purchase contract back from that accepted offer, we're going to go into loan processing. Again, not uncommon. We need some updated stuff. You're going to get your initial inspection and appraisal on the house done. We're going to get any necessary title work that we need from the title and escrow company. You want to get your homeowner's insurance in place because, again, remember, we can't close on that loan until you've got your homeowner's insurance dialed in. And then we're going to go back to final loan underwriting after all those conditions are fulfilled and get what's called our clear to close or final loan approval. There, you're going to get your final closing disclosure just to make sure all the numbers match up and everything is accounted for. You'll get your scheduled signing done with the title company. And once our funding department has the docs back, we fund and close on your loan. And typically within an hour or two, you are on record with the county courthouse. So there you have it. That's the 12 steps to getting a home loan. That's the entire home loan process explained. I've also got some individual videos that go over each step more individually with that. Again, thanks for watching. Give us a like and subscribe and comment below on more stuff that you want to know about the home buying process. We'll see you soon. Thanks for watching.